Welcome to this explainer. We're going to radically rewire your approach to modern AI-driven markets today. If you've ever felt that overwhelming, itchy urge to just do something while staring at the charts, you're in exactly the right place. Today, we're diving into a fascinating concept from our source material called Predatory Stillness and the absolute tactical advantage of doing, well, absolutely nothing.
Let's kick things off with this incredibly provocative truth. It exposes the real villain in your trading strategy. And spoiler alert, it's not a flaw in your technical analysis, and it definitely isn't the market makers plotting against you. It's the agonizing inability to just embrace inactivity. Because while you're out there frantically chasing every minor fluctuation, the absolute elite, they're sitting in total silence.
Section 1. The cost of motion. There's a massive contrast at play here. On one side, you've got your frantic retail trader. The sources actually compare this behavior to a poorly tuned high-frequency algorithm that is literally bleeding capital through overactivity. It's just movement for the sake of movement, right? But on the flip side, you have the elite professional sitting in total predatory silence. What separates the struggling trader from the high-performance pro isn't some complex secret algorithm. It's simply the art of the wait.
Here's the wild part. Your own biology is literally fighting against you. It's a classic biological conflict. Your brain is hardwired to view market stillness not as an opportunity to observe, but as a direct threat. It triggers deep anxiety and FOMO, that fear of missing out. It tricks you into perceiving the relentless volatility of the 2026 market as a hazard you've got to react to immediately, rather than what it actually is, a landscape for a selective, highly calculated participation.
Section 2. Biology of the overtrader.
Modern trading interfaces are straight up weaponized against you. They are meticulously designed to trigger this exact three-step dopamine loop. Step 1, a gamified trigger flashes on your screen. Step 2, you take action, right? You click buy or sell. Step 3, boom, you get a chemical reward, a massive dopamine hit. The interface is tricking your nervous system into executing trades regardless of the actual quality of the setup. You're not even trading for profit at that point. You're just trading for a chemical hit.
Okay, we need a massive pattern interrupt right here. Just silence. We need a deliberate pause to step away from all those internal chemical distractions we just talked about. If you want to succeed, you have to break that dopamine loop and step into the cold, calculated mindset of a predator.
Section 3. The Hunter Strategy.
We absolutely have to stop treating the market like it's a giant casino. The casino gambler throws chips at every spin of the wheel, hoping for a hit, driven entirely by instinct and, let's be honest, entertainment. The silent predator, though, they treat the market like a tactical hunt. You've got to suppress that biological urge to gamble. You wait, you observe, and you make sure that when you finally do act, it's completely deliberate.
So what does a true high-leverage setup actually look like? It comes down to 3 specific criteria. First, you identify high-probability price levels. Second, and this is huge, you actively suppress that biological urge to gamble. And third, you strike only based on high-leverage technical mechanics. Those are the absolute only conditions that justify breaking your inactivity. That's how you make the leap from the psychological prep of the hunt to the precise mechanics of a profitable strike.
Section 4. Precision over frequency.
The math of the strike is undeniable when you start comparing frequencies. Sure, 10 mediocre daily trades might look like you're putting in a lot of work, but focusing on just one precise, high-probability execution per week, that vastly outperforms a frantic daily output. Quality doesn't just beat quantity here, it totally obliterates it.
When you compare the equity curves side by side, the contrast is just wild. A high-volume scalping strategy usually results in capital bleed and incredibly volatile drawdowns. It is a stressful, losing game. Compare that to the concentrated position trader. The result? Steady growth and protected capital. It's the cold, calculated growth of someone who knows exactly how to weaponize their patience.
Section 5. Cultivating tactical discipline.
So how do we actually pull this off in the real world and bridge the gap between knowing the math and executing it? By building concrete routines, you actively weaponize your patience. First up, enforce a mandatory cooling-off period. After a long wait, whether you finally take a trade or even if you miss one, step away. This directly prevents point number 2, emotional revenge trading. And finally, use your stillness productively. Build your market intuition by watching how price reacts at key levels completely without risking your capital. You're still working, you just aren't clicking buy.
This brings us right back around to a brilliant summary from the material. Transform agonizing inactivity
into your greatest tactical advantage. Ultimately, what this explainer shows us is that patience is not some passive burden. It's not boring. It is, without a doubt, your ultimate competitive edge in a modern market that is just filled with endless, distracting noise.
I'm going to leave you with a crucial question to think about. Before you open up your trading interface next time, before you let the gamification and the dopamine completely take over, ask yourself, in a market perfectly designed to force your hand, is your next execution going to be a mere biological impulse or a calculated predatory strike? The choice and your capital is entirely in your hands. Thanks so much for joining me for this explainer, and I can't wait to explore our next topic with you.